Hey guys, welcome back to my channel. My name is Tesl and I'm super excited to have you here. In this video, I'll be talking about Tesla stock split. We'll be looking at if stock split is good or bad, and thirdly, we'll be answering some commonly asked questions regarding investing in Tesla. Let's get started. So Tesla has announced a 5-for-1 stock split after market close today, sending its stock TSLA jumping as much as 8% in after hours trading. Tesla announced today that the board of directors have approved and declared a 5-for-1 split of Tesla common stock in the form of a stock dividend to make stock ownership more accessible to employees and investors. Each stockholder of record on August 21st, 2020 will receive a dividend of 4 additional shares of common stock for each then held shares to be distributed after close of trading on August 28, 2020. Trading will begin on a stock split adjusted basis on August 31, 2020. So what this means right here is that anyone who is a shareholder already by August 21st, 2020 will receive, additional stock based on the stock split, and those stock split will be distributed to each and every one of them on the 28th of August 2020. Trading will begin on the new price on the 31st of August 2020. Right now, I would like us to talk about what stock split is actually. Now, I will just take you right here and we read this. A stock split is a decision by a company board of directors to increase the number of shares that are outstanding by issuing more shares to current shareholders. For example, in a 2-for-1 stock split, an additional share is given for each share held by a shareholder. So for example, if you have 1 share of Tesla, when this stock split happens, you're going to have 5 shares of Tesla. Meaning, this does not mean you're going to lose the value of your shares, but what happens is, for example, if the cost of Tesla at the day of the stock split is $1,000, now what it means is that you're going to get 5 shares worth $200 each, which amount to the same $1,000. So there are different kind of stock splits. As you can see here, we have the most common type of stock split are traditional stock splits such as 2-for-1, 3-for-1, 2-for-1, 3-for-2, and in a 2-for-1 stock split, a shareholder receives 2 shares after the stock split for every share they own prior to the split. In a 3-for-1 split, they receive 3 shares for every share, and in a 3-for-2, they receive 3 shares for every 2 shares that they own. Now, let's take a look at Tesla's Q2 summary. So let's take a look at the Q2 summary of Tesla. So in terms of cash, they said our business has shown strong resilience during this unprecedented time. Despite the closure of our main factory in Portland for nearly half the quarter, we posted our 4th sequential GAAP profit at Q2 2020 while generating a positive free cash flow of $118 million. They talk about the profit. Our profit improved sequentially due to fundamental operational improvement. Additionally, we experienced costs associated with factory shutdown, which were offset by action taken during the quarter to reduce expense for the trailing 12 months. Our GAAP operating margin reached nearly 5%. We expected that our operating margin will continue to grow over time, ultimately reaching industry leading level. Then it talked about we believe the progress we made in the first half of this year has positioned us for a successful second half of 2020. Production output of our existing facility continues to improve to meet demand, and we are adding more capacity. Later this year, we will be building 3 factories on 3 continents simultaneously. They say in Q2, total revenue remained relatively flat. The positive impact of higher vehicle delivery, higher regulatory credit revenue, and higher energy generation and storage revenue was somewhat offset by lower vehicle average selling price and lower service and other revenue. Our operating profit improved in Q2, which is really interesting, despite challenging circumstances. Positive impact included lower operating costs due to temporary reduction in employee compensation expense, a sequential increase in regulatory credit revenue, and deferred revenue recognition of 48 million relative to full self-driving feature release. These positive contributions were offset by significant costs related to factory shutdown, as well as sequential increase in non-cash SBC expense, primarily attributed to 101 million related to 2018 CEO award milestone. While ASP declined sequentially, improvement in product and manufacturing costs driven by Model Y and China-made Model 3 and improved aftermarket software and connectivity revenue made a positive impact in our profitability. Total end cash equivalent increased by 535 to 816 billion, driven mainly by free cash flow of 418 million. Free cash flow was negatively impacted by a higher percentage of delivery occurring towards the end of the quarter compared to prior quarters, as well as an increase in government rebate and regulatory credit receivable, which are paid in accordance with their payment terms since vehicle production reduced in Fort and Nevada in early May. Our days payable outstanding was not impacted as such as initially anticipated. Okay, this brings me to the question, is stock split really good or bad? Based on this article, it said besides making stock price more attractive for individual investors and so potentially expanding the shareholder base, there are a few more reasons a company might split its stock. First of all, to improve liquidity. If a stock increasing the number of outstanding shares at a lower per share price aids liquidation. So if the price of a stock reduces, this will make it possible for trades to be going on that stock. Because with the high price, a lot of people might not have the money to pay in and buy it and also trade. So it says tips right here. This increased liquidity tends to narrow the spread between the bid and ask prices, enabling investors to get better price when they trade. The state here is makes for portfolio rebalancing simpler, makes selling put option cheaper, and also tends to increase the share price. The thing I would like to bring your attention is this right here. It says splits are often bullish signs since valuation gets so high that the stock may be out of reach for smaller investors trying to stay diversified. Investors who own a stock that splits may not make a lot of money immediately, but they shouldn't sell the stock since the split is likely a positive sign. Online splits and buyback may pack the same punch as a company that gets bought out, but they do give the investors a metrics to gauge the management sentiments of their company. One thing for sure, when this action takes place, it is time to re-examine the balance sheet, look beyond the company, what the company is saying is the reason for their action, and review how it might impact their financial statement. Now let's take a look at some of the frequently asked questions about this stock. So the first question that people normally ask is, how do I purchase shares of Tesla? Do you have a direct stock purchase plan? According to the answer on this website, Tesla website, it says Tesla shares trade on Nasdaq exchange under the ticker symbol TSLA. To purchase shares, we need to do so through a broker. If you do not have a brokerage account, you will need to open one. At this time, Tesla does not have a direct stock purchase program. Now it said, can Tesla comment on a move in its share price or provide investment advice? Unfortunately, we cannot comment on moves in our share price or offer investment advice. Does Tesla pay a dividend? Does it plan to do so? Tesla has never declared dividend on our common stock. We intend on retaining all future earnings to finance future growth and therefore do not anticipate paying any cash dividend in foreseeable future. When was Tesla initial public offer? The first IPO, Tesla initial public offer was on the June 29, 2010. The IPO was priced at 17 per share. This is crazy. 17 per share, and now it is over $1,000. Oh my god. That is growth right there. So guys, I hope you guys enjoyed this video. If you like videos like this, please don't forget to give this video a huge thumbs up. Let's get this video to 1,000 likes. I've never asked for this before. Help me, let's hit this video to 1,000 likes, and subscribe if you've not subscribed to this channel. And let me know what you guys feel or think about this stock split. Are you going to buy into this? You have, I don't know how much is going to trade on the day it's going to split, but are you saving or are you interested in buying into this company? Let me know and let's all discuss. See you guys in my next video. Bye bye.